Kochhar, the head of Equities at Investec Capital Services, who is joining us now for more on market fundamentals. Mukul, thanks very much for your time here. Just because this Impact India AI Summit is happening in New Delhi as we speak, I wanted to start by asking you about the IT space. We've been speaking to analysts. Some are saying the fears are overdone. Every time there's an AI headline, the Indian IT stocks getting hit. But what's your whole take, on the space to begin with, and then we'll get to the rest of the markets.
Hi, thanks for having me today. On IT, there are two sides of the story. Yeah. So one is the AI impact on IT services. I mean, in my mind, that is definitely overblown. I've seen this sector for over 25 years. I used to cover it in the US when I was there. And at various times, you had different productivity waves. Yeah, Java was one of them. Client server was another one. Then Visual Basic was another one. So every time you've had this productivity wave, there's been a thought that maybe now the effort will go down and number of people needed for coding will come down. That has never played out. Yeah, and I think this time also that will not sort of play out in the way the street is fearing. There is other aspect though that Indian IT companies have become very large today, right? As they become very large, structurally the growth has come off. Yeah, therefore the multiples have to reflect that, and therefore the derating that is taking place in IT. So I think we should not confuse the two. I think AI impact is probably going to be less than what people fear, but growth itself is lower because the companies are larger, and that is the derating in IT companies that is playing out today. And I think that is okay. That is part of price discovery, which will play out.
All right, Mukul, barring IT, what else are investable ideas right now? People are betting on the NBFC space, the financials more than banks. I mean, do you have a view here? Financials, while it is an overweight, it's PSUs, private banks, and non-banking financials. And in NBFCs as well, there's the gold financiers. So what's your pecking order here?
So of course, I think I'm fairly constructive overall on the financial sector space. I think one sector that remains undervalued relative to the kind of growth and the change that sector has seen is what you mentioned, which is PSU banking space. We've been very constructive on this space for the last few years. I still think it is undervalued for the kind of structural improvement these businesses have seen, the kind of growth that they're seeing today. Today, the advanced growth, for instance, in PSU banks is higher than advanced growth in the private space, and they still trade under book, yeah, for a 15% ROE. I think the PSU banking space is still sort of worth looking at in terms of investing. In the large cap private bank space, there are a few banks which are standing out in terms of growth versus the valuation. On the large NBFC space, in fact, I'm less constructive, yeah, because I think that is where the competition of the retail sort of client is going to play out, and competition is going to make sure that returns are going to be tepid. But stock-wise, there's enough ideas in the financial services space. I mean, there was another question you had.
Ideas?
Sorry, ma'am.
No, sorry, go ahead. Financials, we've heard your views, not so big on some of the NBFC names, more keen on the PSU space. But apart from financials, in the current market, the trade deals are behind. This AI trade is playing out. What sort of sectoral allocation, what would you recommend to long-term investors? I mean, how should they approach FY27, apart from financials and IT that you've spoken of? Are there other ideas that are emerging as, more attractive?
In hindsight, these trade deals that we have signed will turn out to be one of the largest or the biggest, most consequential structural reform this country has seen in a while. I'll just give you one data point. Till last year, our trade deals, when I measured it as India's trade deal with the percentage of global economy. So, for example, when we signed the US trade deal or the EU trade deal, we signed a trade deal with 16% of global GDP. Yeah? So this number of our trade connectivity is what I call it, has gone up from 12% to 70%. Yeah, this is an unbelievable leap in a single year. At 70%, we are at par or as well connected for goods trade with powerhouses like Japan and Korea. Yeah. This is going to be fairly consequential as we see how the next 5 years play out. And we are betting on sectors that benefit from this trade connectivity. Textiles is one of them. Auto components is another one. electronics is another one, and finally gems and jewelry. I think these are the sectors to watch for. One last thing I will say out here is that when we look at the public markets, the companies here are undersized, so they largely sort of follow in the mid-cap play. So a lot of multi-baggers will be born, I think, in these sectors. So investors should look for alpha ideas here.
All right, we take that point. Mukul, thank you so much for that short but effective conversation out there. We'll take your leave on that.